Hey everyone, I'm Sarah Toomey and I am the Communications and Education Specialist with CEIRP. And today I'm really happy to be having a conversation with Nick Eddy, who is the manager of the Creative Arts Financial, which is a division of First Ontario Credit Union. Thank you so much, Nick, for joining me today. I'm really happy
Thanks
to
for
be
having
chatting
me.
with you. It's going to be a lot of fun, I think. As you know, our members are often gig employees and they're working projects or they're working one-off and um, they may be, maybe they're salaried through the local and they've got projects or the guild, I should say, and they have projects ongoing, or they're working in a theater and it's a short-term position. And so they might be getting a paycheck or they might be being paid in cash. So I was really interested in finding out from you a little bit about budgeting for creatives and creative people and gig workers. And I was wondering if you could talk to us a little bit about, for instance, um, when you're paid in cash, how do you go about budgeting when you know that it's maybe a little bit infrequent
hmm
and when you're just receiving cash, and then maybe we can talk about that, and maybe we can talk about when you have a salary. So let's talk about the cash first.
Yeah, so for me, the overall basis of a budget is knowing what you've got coming in minus what you've got going out. Just to simplify that. Like you said, when you're in the gig economy or you've got infrequent salary or infrequent pay, whether it's through role or side hustle or whatever it is that you choose to do, it's really hard to find out what that is on a regular basis because it's up and down. So, in that particular situation, we usually recommend taking a look back over the last 2 years and averaging. It may not give you the most current and up to date scenario, especially if you've got a higher paid, cash role. But it still does give you a good 2 year long average that you can figure out, how much you get on a monthly basis
Hmm.
historically. It's not something you can really factor in where that next pay is coming from using that, but it helps because I find that to be able to see things, I'm a very visual person. You probably see me moving my hands around at the
Hmm.
bottom of the camera. That's just me being with my visual cues, but it'll help once you actually see it and you've got a number there.
Well, sometimes you're tactile and you got the
Yep.
cold hard cash in your hand and you can just go spend it right now.
Yeah.
How do you fight that urge? How do you find the discipline to say, okay, I've got my pay packet, I
Mhm.
counted it, everything's perfect. And instead of taking that hard cash that I've got in my hand, how do I go to the bank and deposit it or go to the credit union and deposit it? Make sure that I'm doing my due diligence. What advice
Right.
would you have?
So everyone works differently in the way that they manage their own finances, and our role is to help work within that personal preference. If your intention is to put it to the bank, just pull it all in your checking account, and then have a series of sub accounts, sub checking accounts, or sub savings accounts alongside that one, so that you can manage your financials. So, for instance, if you deposit, let's say, $1,000 into your checking account, from that $1,000, how much do you need to put aside for rent? If you break it up into maybe more weekly chunks as opposed to looking at monthly, it might make things more palatable, taking it in smaller bite-sized pieces. Then you've also got, okay, that's rent, how much on food, and having those series of different sub accounts to help you manage those accounts. I also suggest the same sort of thing is if you are going to keep that cash in hand and rather than put it through a financial institution, have a series of jars:
Hmm.
spend jar, save jar, rent jar, food jar, and don't spend more than you've actually got in that jar. That is your budget. Um, Personally as well, I take the money out when it comes to wanting to budget for the food. for our household. That way we know we don't overspend. This is
Hmm.
what we've got. So that's what we're going to spend. We've got leftovers. Great. Maybe we treat ourselves to some ice cream or something.
Yeah, it's fun. And so now a person who has a salary and is going directly into their account,
Hmm.
would you also advise a person have sub accounts, or how would you deal with something that's more digital that you don't actually feel it tactile?
Yeah, right. So a lot of people can save better when it's out of sight, out of mind. Some can do it being right there on the spot, but a lot. Okay, if I don't see it, I don't spend it. So when it comes to salary based, if you're already having your taxes deducted from that paycheck, or your contributions to CEIRP coming through that product, or you're making your contributions to your tax-free savings account through any financial institution or CEIRP, um, that's already gone. So perhaps consider the products and programs that CEIRP offers to be able to help support your savings habits, and then you don't see it.
Hmm.
It comes out before it hits your bank account. Let's just say that's not something that you are taking advantage of. Well, work with your financial institution or a trusted financial partner and how they can set up a separate savings account to move money aside. The question I always get is, well, how much should I save? What should I
Hmm.
save? How much when? Really, it's going to be individualistic. We recommend saving a minimum of 10% of your income per paycheck. That being said, maybe it's not possible, because the last
Hmm.
thing you want to do is save 10%, be making small amount of interest on it, but then you have to rely on credit products to help you get by. So that's what we take a look at there, and individualize every specific plan.
Hmm. Now, I've heard you talk about bookkeeping.
Mhm.
Is this like an offset of or offshoot of bookkeeping in how you divide up your accounts, for example? Provided I would think having checking accounts that have no fees attached to them would probably be ideal. So is that your idea of one way of kind of quick and easy bookkeeping, or do you have another element that you would include in that for gig workers and creatives?
It depends on how the worker is sort of employed. If you're a salary based individual, um, the bookkeeping process is less cumbersome. You don't have to keep track of all of your spending as much,
Hmm.
because there are only few tax deductions that you can actually make. So yeah, maybe using the savings account or the checking account to help do that, it's going to work. If you're more of an entrepreneurial, gig to gig, self-employed individual, this is where I sort of strongly suggest, there are a lot of online bookkeeping tools out there, softwares that you can use and link to your bank account that will then download all your transactions. You can categorize them. For instance, grooming and haircuts,
Hmm.
gifts, entertainment. Many workers in the industry can claim haircuts. You
Oh,
know,
that's
if I
great.
right, I
Yeah.
can't, because I'm salaried employed. So
Hmm.
you've got to make sure that you keep your receipts, or you manage that so that you're not just putting them all in a pile and then you miss out on any potential tax savings in the future.
And there are machines that you can scan the
Yep.
the receipts into your computer, and you can capture the numbers.
Yep. Or you
You know,
just with
little machines about this big sometimes, little scanners, which are
these
really neat.
these these guys, these cell
Yes,
phones.
cell
Some of
phones.
some of the apps out there have, you can directly take a picture of that receipt on your cell phone,
Hmm.
straight into that software tool, throw away the paper.
That's awesome. That's really good. What advice would you give to a member, to a CERP member, for example, who is a creative and gig worker about managing their debt? When you do have this kind of infrequency, or you're worried about, okay, I've got this gig for 9 months and then 3 months I'm not working and I'm looking for my next project, but I have this debt over my head. So what kind of advice have you been providing your clients about this?
So I've just got to be careful on the terminology there. We provide guidance, not advice. There's legal
I'm sorry. Thank you.
implications on that. That's okay. Um, when it comes to that, managing debt, I know, especially with everything that's gone on in the industry in the past 12, 15 months, plus you've got pandemic a couple of years ago, that we've all lived through, um, the first suggestion I'm going to make is reach out to your trusted financial partner to see if there's any way that they can work with you to come up with some sort of structured repayment plan using some of the facilities that they offer. But it all really comes back to your very first question about budgeting. Um, if you've got a line of sight on your budget, how much is coming in, how much is going out, you can see if there's any areas that you can tweak
Mm-hmm.
in order to save some money on spending. For instance, going to a very large national coffee chain every morning and getting a large double double. When you think about it, that one time doesn't cost a lot, but when you add that up over the course of a month, yeah, it could be $30, $40 in your pocket
Mm-hmm.
versus buying a bag of beans and or using the pods that you use there, Sarah, to get your coffee and doing it at home.
Mm-hmm.
So those little belt tightening methods. And then if you find out, okay, I've got money left over after that, best time to use is to use your money to repay that as opposed to borrowing from someone.
Mm-hmm. Mm-hmm. I like the idea too. I saw this article about how um you use the $1 calculation.
Hmm.
If something you divide the price of an item by the number of times you're going to use it. So let's say you're buying coffee pods or teapots, and let's say there are 30 in the package, and the price is $28.
Hmm.
And then you see if it's less than $1 per use, then that's a good buy. That's
Yep.
economical. So, and I think a lot of people forget the fact that they can often have a debit card that's also connected to um, Visa or a MasterCard. So
Hmm.
like the Master or Visa debit card. And
Correct.
so when you're online making purchases, it's not going out of adding to your debt. It's actually being debited from your checking your savings,
Hmm.
however you got it
Correct.
set up. And so it's listed by that company that you're purchasing something from as a Visa payment, but you're
Hmm.
paying for it right away. So for me, I have found that that's been a great way for me to manage my debt by not adding more to it, by budgeting for an item, but using my debit credit. So my Visa debit card is what I've
Yep.
been using. So
Yep.
I think that's a really great tool that I've, found just by coming across the idea in the media, reading an article about it, and or having conversations with people like yourself, you know?
And also a great way to help you use that is again, if you really wanted to go to that nth degree, have a separate spending account attached to that card. Because we also know that identity theft and fraud are very prevalent in the market nowadays, especially with online transactions. If
Hmm.
you want to link that card to a specific checking account so that it's only on that account and you've got the bulk of the rest of your finances in a separate sub account,
That's a great
right? To
idea too.
protect yourself.
Yeah, and that's another way, I guess, too, to for your bookkeeping column, wouldn't it?
Hmm.
You
That's your
use that,
spending.
yeah,
Yep.
that specific debit card, debit Visa
Yep.
or MasterCard for your groceries, let's say,
Hmm.
or for items, as you say, that are connected to the line of business that you're in.
Yep.
What your creative gig is, you said haircuts. So you could be using that debit card for
Yep.
haircuts. And then you
Yep.
have that item already in your system, in your tracking system, whatever that might be.
Yeah. So that's a great option if you're not looking to rehabilitate or create a credit history.
Mm,
Because you don't need a credit product for that. That is, yes, it's a Visa product or a MasterCard product that's attached directly to your checking account.
mhm,
But if, a future goal or a future aspiration is potentially, I don't know, buying a car, financing a boat, buying a trailer or a camper or whatever it is,
mhm,
most lenders are going to need to look at some form of credit history. And that's again using your example where maybe a small credit card that's used just for that will be helpful. Spend
mhm,
it, but don't have that high limit. Don't increase the limit. Don't take advantage of those. Yeah, we can increase your limit offers. Keep it within manageable means. Use it, repay it. Use it, repay it, and that's going to be really helpful to establish a credit history or re-establish a credit history if you've been impacted by some colorful scenarios over the past few years.
Yes, and I mean when you know that your credit card has a high limit, it's really easy to, lose control of yourself sometimes
Yep.
and to, get that limit and then to be in this circular mouse wheel in a way,
Hmm.
trying to, paying a bit but never quite getting any traction to paying it off. And
Hmm.
it just becomes an issue and, it can trip people up. Sometimes you just find yourself in a little bit um, of trouble. So, our members through our plan provider have the option of using an organization called the Credit Counseling Society.
Hmm.
And there's a special deal in how they do the fees. The fees have been negotiated to a very low level. I think it's about $75. A lot of that information is on our website. So people can reach out to me at communication@cirp.ca for more information about that piece and to get more information about this service as well. Um, but that being said, I thought we might just talk a little bit in general terms about debt counseling
Hmm.
because, sometimes it does happen where people need a little bit more advice. So, for instance, there are consumer agreements and consolidation loans and other solutions that a person might hear about. I'm just wondering if you might be able to talk a bit about what those items might be and what a person might expect. Uh, so just some background about those things, if you don't mind.
Yeah, so from the perspective of financial services institution, we always encourage our members to, or anyone who we speak to about these scenarios, is to make sure that they do a whole range of due diligence first.
Hmm.
In the sense that if you do decide to file for a consumer proposal or even a bankruptcy, it is going to impact your credit history, and will follow you around for a number of years afterwards, even
Hmm.
when you've met your obligations. Sometimes, yeah, it's the only option, and that
Hmm.
would be where we encourage a reach out to a non-profit credit counseling service such as the one that you just mentioned.
Hmm.
Um, when we're speaking to members, I feel that there's this misconception between a consolidation or credit consolidation and a consumer proposal. Some
Hmm.
people feel that they're one and the same, which they're not.
Hmm.
So just what do I mean by that? I mean, a consumer proposal is a legal agreement with a credit counselor or insolvency trustee and things like that, where they basically wipe your slate clean in so many circumstances, where you have to, a monthly obligation to repay. Um, but it's something that future lenders or anyone that you're looking to work with in the future, it may not be very helpful.
Hmm.
A consolidated loan or a consolidation loan is where a lender, financial institution, a bank, credit union, whomever you decide to work with, they take all of where it's affordable by way of income, they take the credit that you have, put it all into one payment. So instead of paying 5 different credit cards, their minimum payments of, let's call it $200 on one, 100 on the other, 150. So what we're at, 450 now. Plus, let's just say you've got a $600 monthly obligation. They put all that together on one structured pay down loan. Most lenders won't repay revolving credit with a line of credit, like a revolving debt. Revolving debt goes
Hmm.
back into that scenario you were talking about, spinning your wheels,
Hmm.
um, and structure that over the course of the next, say, 5 years. Um, you have a monthly payment that's more manageable. Let's just say it's $350. And typically the interest rate is half of what you'd be paying on a credit card. So you're paying less interest, um, paying it down over 5 years, or 2 years, or whatever your lender, however you can structure it, and then it's gone.
Hmm.
I hear a lot about, well, I don't have stable income, and that's not something that I can look at doing because yeah, sometimes that unfortunately is the case. Other times, maybe you have a very close family member or friend or someone who's willing to help, call what we do co-signing on that to
Hmm.
help you. So, that's something we'd like to explore all those options first before we say, okay, I think you perhaps need to talk to a trustee.
Hmm. And I think sometimes too, even a credit counselor can talk to you about negotiating. So
Hmm.
before you sign anything or take on any more loans or whatnot, maybe you can see about negotiating for a different interest rate or negotiating for a different time of the month to pay, because that can be an
Yeah,
adjustment to um, how much you spend, how much you're owing for each month
it
as
can.
well.
I mean, if you're also already gone to that credit card provider's collections department, you could also act as your own credit counselor and try and negotiate on your own behalf with that credit provider.
Mm-hmm.
Um, sometimes let's say you owe $5,000, they may be happy to say, let's settle at 3,000 by next week and forego the rest. Now that does bruise your credit. You know, it would sort of show up on a credit bureau that was settled by arrangement,
Mm-hmm.
but it's nowhere near as damaging as the consumer proposal
Mm-hmm.
option.
That's interesting. And because the idea, of course, is to see if you can't get your credit rating to increase. The higher it is, the better. So I think
Mhm.
right now, a good rating in Canada, or maybe it's done by province, it should be around 650 is a good rate. And then you want to get higher than that.
Yeah, it's all relative to the financial institution you're working with. You know, in our community, in our market that I'm working through, rate is not necessarily the be all and end all.
Mm,
We approach things with a risk-based pricing, or a, you the interest rate that you're provided is the interest rate you've earned. Some other providers, lenders, won't touch it unless it's above 700. So you want to make sure you're working with a lender that understands and that's also willing to work. Or we look at things knowing that bad things happen to good people, whether it's through strikes, through
hmm
a global pandemic, through a marital separation. Things happen,
hmm
and it's we try and see the person rather than what the scenario was.
hmm And the
Not
good
saying
thing is, sorry, go ahead.
I was going to say, not saying we can say yes every single time, but at least there's a more of a conversation, a deeper fact finding, as opposed to, well, that's your number. Sorry, can't help.
hmm Yeah. And I think what's really good too, knowing when you do work in a gig environment and you're a creative and your hours are a little bit different and irregular in some cases, at least we know that there's Zoom and other online systems where we don't necessarily have to go to somebody's office to have a chat, that we
Yep,
could have these kind of conversations digitally over our phones or our iPads or other kind of Android pads as well. To have those conversations and to help people get out of their financial strife to a certain
yep,
extent and to focus on their goals and um kind of tie up those loose ends
right.
of the financial management of having that kind of working life.
Yeah, and a lot of times recently I've seen, and it's where we like to help, is that our members, some don't want to look. Okay, it's not looking good, but you don't want to look because then when you look, it's real, and then
Mm,
you have to do something about it, right?
mhm, mhm,
And then it becomes the case of, well, I don't want to, and then it goes completely down the rabbit hole. Um, that's why your financial partners, whomever you bank with, wherever you decide to get your financial services from, that's their role. That's our role to help.
Well, I think we've talked about everything we were set to talk about, and hopefully, if if anybody has any questions, so they can reach out to you. They can reach out to me as well, like I said, at communications@cirp.ca. And thanks so much, Nick, for having our chat today. Thank you very much.
You're welcome. Thank you, Sarah. It's
Okay,
been a pleasure.
thank you.